Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of August 3rd, 2026. Let's get started. SEAF signals for this week. We retain financials and healthcare, and we pick up consumer staples in replacement of energy, which had a little bit of a header. Obviously, energy is very much related to what's going on geopolitically. So, when the U.S. government decides that they're no longer bombing Iran, or signal that things are cooling, energy money flows out of energy. When things start to escalate in the Middle East, money flows back into energy, as it's very directly related to the cost of oil. So, we are somewhat expecting to see these kind of stronger swings as geopolitical tensions ease and wane, ebb and flow. Financials have been strong, really starting to show some of that accumulation through the 3 time periods. Overall ranking of 4. That's a nice strong score. Healthcare hanging in there, just being pretty good across the board. Trading week, tactical month, strategic quarter, 4, 3, 3 respectively for an overall score of 10. And consumer staples kind of starting to poke its head through with a trading week of 2, showing that nice positive skew we like to see with an overall score of 13. Technology continues to slide after it being really strong for a bit, still holding on that strategic quarter of 1. That accumulation is starting to roll off with the negative accumulation that we're seeing on the tactical month and the trading week, but overall, still holding that strength, but weakness here on overall. And then communication services coming in here at the bottom for just overall being in a bad spot. But again, this theoretically should be technology once this strategic quarter starts to drop off itself. Headed to our heat map. Again, showing some real strength, 0.5% on the trading week for financials, showing that's significant. The 0.4 number is kind of what we're looking for in terms of significant amount of asset flows through our algorithm. So that's showing pretty good strength. Number 2, consumer staples at 0.26, not a bad for a second level. And then 0.14 for consumer discretionary coming in at 3rd on the trading week. Overall, we were negative on the week in terms of asset flows, but 3 of the 5 days were up days. And the biggest kind of highlight here was on 7/29. We had a 1.1% outflow in terms of assets coming out of the 11 sector spiders. That was completely reversed on 7/30. So rush of money out, rush of money back in, which has really kind of been the story of the SEAF model and the story of sector rotation in general. I think, again, we're sitting in unique spots in terms of we're fighting 2 different wars, for a lack of a better term. The first one is a real war over in the Middle East, where we see energy, money flowing in and out of energy as the price of oil ebbs and flows. Again, as we're war on, war off. War easing, war escalating. We're seeing that money kind of move in and out rapidly when it comes to energy. But we are seeing a similar situation when it comes to tech and some of the other sectors. The other war, which isn't a war, a physical war, but, a war of ideas. It's for technology in terms of, is AI in a bubble or not? How much revenue are we going to generate off AI versus not? And, really kind of seeing a lot of this money just aggressively flowing in and out of these sectors, trying to understand what's going on. I think a lot of investors in general, but a lot of these bigger investors really don't know what to do. So the money comes in, and the reason I'm bringing this up is because of 7/29 and 7/30. 1% increase, money just leaving the 11 sector spiders at a rapid pace, showing a lot of fear in the broader market. Hey, we need to get out of the way. The next day, money flowing back in almost equivalent to what it flowed out of the day before. So over a 24-hour period, managers went from being extremely nervous and pulling money aggressively out of the 11 sector spiders to all of a sudden being calm and pushing all that money back in. Again, investors are a little bit, if you're saying, hey, the SEAF model has been rotating quite a bit aggressively and we're seeing these big big swashing moves. That's just what investors are doing right now. They're trying to find that next trend. We are starting to see that accumulation in financials, which is nice to see. This is that darker green. So we are seeing accumulation, but outside of this, it's relatively light. Energies have those big inflows and outflows. I think that's just the nature of how aggressive that money goes into energy when the war is on versus out. And similar thing with technology. Money flows really strong in, really strong out. Really just depends on what side those managers are taking on that particular day. But it's definitely been wild. And this chart kind of confirms it. This is our sector spider total AUM chart. You can see here we've had some really big swings. This was last week. This was that Wednesday. The money flowed out and then equally flowed back in, and we eked slightly above that 21-day moving average. What is this really telling us? The market still doesn't know. You can see since May, really still been sideways, just tightish range. Really don't know where we're going, but we're not seeing any of that money consistently stay in or consistently stay out like we've had in the past. Still very much choppy. Money's coming in and out very aggressively, depending on what the news says. Managers are just trying to make sure they're staying on sides. So that money is going to come in and out relatively aggressively. And until we make a distinct move above or move below this 21-day moving average, this nice red line, things are still going to be choppy. We're going to see those up and down moves kind of aggressively come in and out, really just depending on the news of that particular day. That's kind of where we're at the moment. Consumer discretionary. I just wanted to highlight consumer discretionary. It's not a SEAF signal. It's only in that lower neutral. But whenever I like to see that positive skew, it's just something I like to point out. It tends to be in the head of something else. Now, it's not guaranteed. This isn't a leadoff. I'm not saying that we should be jumping into consumer discretionary, but when we got that darker red here in the strategic quarter, which is accumulation, lightening of the red, to closer to neutral and then to positive, the tides are starting to turn. You could see here a little bit, kind of a little bit of a turnaround on the relative performance versus SPY, but we are in that deep, dark downtrend. This is why this isn't a leadoff. I'm not prescribing consumer discretionary is next, but I do like to see that turnaround, especially this bottoming out and then coming out and that correlating with a relative performance move. But even if it's not a giant one, still a kind of a reversal. So we'll see. This is a space to watch, but nothing to do yet here with consumer discretionary. Financials has been strong, strong relative outperformance, which is nice to see after being underperforming the broader market for quite a bit of time. Obviously, we've had little spurts of here that we've attempted to come into favored, but nothing really stuck. And then we resumed downtrend. That doesn't seem to be the case here, as we've maintained this upper favored. And now we're sitting kind of close here to the pinnacle with an overall score of 4. And what are we seeing here? Nice, strong relative outperformance. It's caught that trend off the bottom after that reversal. After we kind of skyrocketed through this avoid neutral into that favored, and again, this is what we hope to see in consumer discretionary. Next week, this thing kind of continues to jump. It's not there yet, but financials, that's kind of what we were starting to see here. Bottomed out, aggressively moved, and then held. So this has been a good place to be. Financials continues to be a good place to be. Consumer staples. Consumer staples is coming in with a strong trading week. Number 2 overall in that trading week. Also has that positive skew. Really haven't seen the aggressive move on the relative performance side. We have a nice little push up, and then a little bit of a push down here. Overall, in terms of its relative performance, consumer staples has been going sideways. No real particular up or down trend over the last year, and that's kind of confirmed here that we've spent a lot of time in neutral. So in order for this thing to kind of really start to take off, I think we would need to see some of those sustained flows. We don't know that yet. This is just something that we're watching. This is a SEAF signal, so hopefully we catch this early and this trend continues to kind of accelerate through, but a little bit nothing, just starting to get going as we eked into that upper favored with that strong trading week number. Again, like to see that kind of get sustained another week or two of those stronger numbers for that week, and that starts to push into our tactical month, potentially seeing a little bit of extra life there in consumer staples, but a good starting point for there. Healthcare looking strong. Again, staying in that middle to upper favored here. Nice relative outperformance move. We are coming into some resistance on the relative performance versus SPY side of the chart. Again, that's kind of a secondary situation. Those resistance and support levels are a lot more stronger on the price chart than they are on the relative performance chart, but I do think they are still relevant, so it is something I'm just keeping an eye on. But nice, again, sitting up in that favored, as we've accelerated up through, some nice relative outperformance here from healthcare. And last but actually least on the week and the tactical month is technology. Technology continues to slide in its relative underperformance versus the S&P 500. We aren't sitting in that avoid yet. We still, even after several weeks of strong outflows from technology, still holding on to that strategic quarter one. You have to understand how aggressive this move it was right here, as we stayed in that upper favored for a bit of time here, but how much money flowed into technology really from the end of April through the early part of June. Just it was an excessive amount of capital kind of flowing into technology. It was the only horse in town, and that is still holding on that strategic quarter. So we haven't kind of broken down through into this true avoid yet due to those asset flows, but money is still flowing out of technology. Negative 0.32 on the week, so not an extensive giant outflow, but still strongest for the week, and really starting to pick up some negative accumulation here on that tactical month. So technology continues to be a place to avoid. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.